Alrighty, folks, it's the beginning of 2024. We are having our first conversation with Convoy Home Loans. So we would be remiss if we didn't talk about DSCR, we didn't talk about investment loans. We talked last week about owner OC and somebody getting sub 5% on a 20% down FHA loan, which blew my mind away. So we're going to welcome Jonathan to the show and figure out what's going on for everybody else. How you doing, man? Happy New Year.
Happy New Year. I'm all right. How are you?
I'm doing great, man. So I'd be remiss, man. We got one rental at a time, a lot of investors, a lot of home buyers. Why don't we talk about DSCR and investment loans? What are you guys quoting over the last few days or weeks?
Yeah, so DSCR obviously has been a little bit on a decline in terms of rate wise. Now we were talking going into the new year about how the rates were starting to drop from 6.5 to 6.25, 6 1/8 as it like kind of tapered down with buy down. What we're seeing now is actually even without the buy down, there be opportunities in kind of the 6 month shorter arm space. So for example, yesterday I actually submitted a client on a DSCR loan on a 6 month arm at 5.75. So yeah, without buying it down.
Wow.
So there are with 20% down too on a duplex. So there are scenarios right now where you are able to secure a below six DSCR rate.
That's
And
that
on
is
top of
nuts.
that, if the SOFR doesn't jump up, because it's, we all expect the rates to kind of stay pretty much stable.
Mhm.
We don't know what's going to do going downwise, but we know at least it's going to remain pretty stable.
Mhm.
The 6 month arm option that'll secure a loan for at least a year, right? And this is really good for people that were thinking of maybe doing bridges because they're like, should I buy it on a bridge and do an ARV, or should I run it on a maybe 6 month arm with no prepay? It's almost a no-brainer to run it on the 6 month arm with no prepay if you don't
Okay.
need to capitalize on the ARV because the rate
Mm.
is half of a bridge loan, right? So if you are looking at a bridge, some people are looking at bridge loans, trying to buy it for a short term and then fix it up and then capitalize on the ARV. But if you don't need to do that and you're okay leaving the spread a little bit and maybe after a year capitalizing on the ARV, then it's a great place to be at half the rate, under
Yeah.
six, and
Yeah.
cash flow positive while you're going.
Yeah. Bridge debt is definitely double digits these days. It's definitely a part of the market that's you're getting less lenders there, frankly, and rates are going up. So I like the idea if you're putting a deal together and you don't need that extra cushion, and you have a shorter term horizon, maybe the 6 month does make sense. As you know, not a huge fan of arms,
Yeah.
but again, I'm a buy and hold guy forever. So if that's not your strategy, if you're doing something different, then by all means, it's something possibly to consider.
Yeah, absolutely. And that goes to our point of like every individual investment real estate is special. It's a living, breathing being, right? You can't blanket statement any individual investment real
Agreed.
estate portfolio, right? Every single house that you own, every single house that I own, it doesn't matter. It's all individually kind of made out to be optimal for that property, right? So whether you go a 30-year fixed DSCR and you buy it down and get it to a 6 1/8 and run it, or whether you do a 6 month arm at 5.75 or whatever it is, or without buying it down at like 7%, doesn't matter. Like you still like have to individually figure out what each property fits into, because if you don't do that, then that's where you kind of get mixed up. I think blanket statements hurt more than anything else.
I I agree 1000%, especially with investment properties, especially with the number of ways you can get in and get out. You can scoop equity, you can refi the debt. I mean, there's so many ways that you can structure a deal. And that's without even getting to create a financing, right? Get the seller to take a small second or any of those other things. That's why Convoy Home Loans is on the channel, because you and your partner Dustin um, are willing to listen to investors, are willing to say, "Hey, what are you doing? What's the plan?" And you propose option. And the other thing that Convoy does, and I hear this from the audience all the time, is you let them make the decision. Right here's two or three options. What are you comfortable with? Maybe it's a 6 month arm, maybe it's 30-year debt. It's always the investor's choice.
Yeah, absolutely. And I mean, keep in mind we built the company for investors, right? Like we can do conventional FHA VA with our eyes closed because that's all clicking a button. But we built the
Right.
company to specialize in investment real estate and luxury real estate. So like this is our playing ground. When everyone else is trying to jump in, this is where we've been living.
Right.
So yeah, we have a lot of options for people.
Yeah. And let's not forget, you go back on your playlist, Convoy Home Loans, you're creating products. One of the things that was fun to watch last year was all the new things that you were creating. You were working with your lending partners, uh, and you were creating brand new stuff. When the market was pulling back, you were leaning forward. So that was fun to watch as well.
Absolutely. And obviously this year, I think the outlook, obviously rates are supposed to kind of stay about the same or go lower. Nobody really knows what's going to happen. But there are what I'm curious about to see this year is how non-QM reacts. Just because I feel like as conventional and FHA and VA start to dip down in rate, non-QM demand is going to go down.
Right.
Which means that realistically speaking, Wall Street's not going to get as much of a return or return on investment. So a lot of people that think that the rumbling on the street is if demand goes down for, let's say, a DSCR product, because that's the first thing to trade out,
Sure.
gone. Um, if it comes down too far, then they might stop doing the program, right? If it's potential, right? There's no like
Sure.
this is a new program. It's only been around for like 3.5 years. So it's like there's a chance. It's not a guarantee that we can say like, oh, conventional is going to keep going, right?
Mhm.
So
Yep.
that's something that I'm curious about this year to see where the demand will be. So Wall Street wants to keep buying and trading, but a lot of clients that are expecting to refi into DSCR like 100%. Again, we've said
Mhm.
it multiple times, like there's no guarantee that you'd be able to do that. So you want to make sure that if it's a property that you like and you are going to be, cash flowing positive in, make sure you get the correct debt for that property, not the
Yeah.
wrong debt, expecting to get
Yeah.
something in the future.
Yeah. Please make sure the debt matches your plan. Uh,
Exactly.
Yeah, it's right. And then, again, if folks want to review their plan, they want to review their options. Jonathan, how do they reach out to Convoy?
Go to convoyhomeloans.com and let us know you came from more.
Yep, tell them you came from over. You get one of the two principals, people I go to, I talk to. You will have access to them as well. Jonathan, thank you so much.
Thank you.